purely because I slept in, bro. I'm not feeling good. I realized that my body is just running on straight fumes. Did you cold plunge today? Yeah, bro. I did one right before getting in here. Part-time sh- part-time streamer. Bro doesn't eat carbs. Yeah, that's part of the reason too. I'm losing weight and I'm also not getting nearly enough sleep, bro. Hold your breath. That helps with what? Bro, getting rid of social media fucking me. I feel like social media is a pretty easy habit to kick, bro. Not breathing. Okay, bet. Here we go. That was pretty solid. All right. Anyways, man, first of all, how are those habits going for you guys? You guys still going strong? I'm going strong on mine. You said bad? How so? Did you fold? Has anybody relapsed? Don't say if you guys are going good. Has anybody relapsed? You folded? Bro. You have in less than 24 hours. Jesus, bro. Like, hold on. Let me drink some water so I can actually yell at you guys. I'm telling you guys right now. Actually, no. I'm not even going to tell you guys in an upset tone, bro. I'm telling you guys right now, you guys won't get anywhere. You guys will not change your life at all whatsoever, ever, like in your entire life, if you guys just keep doing the same shit that you guys have been doing since before then. Like, I'm not even upset because, again, this is a two-way street. I'm literally here to give you guys help, to give you guys lessons on how you guys can be better traders and better people and actually change your life, and whether you guys take those lessons to heart and actually apply them, then, like, good for you. But for the people that don't, am I going to be upset? No, because I know for a fact that I did everything on my end to give you guys the tools to turn profitable and to change your life. But geez, bro, that's crazy. Man, what the fuck? But there we go. That's crazy. But you guys know what I'm saying. I can only do so much for you guys. So it is what it is, man. If you relapsed, doesn't suck for me. It just sucks for you. Again, like we already went over the psychology part. I already told you guys that like you guys are gonna have to be the ones that are actually taking action on this shit. And if you guys don't, then that's not my fault. It's your own. You are the one after the mastermind is said and done. You guys are the ones to blame if you guys don't turn profitable. As like sad as that sounds, like you guys will be fully the ones to blame if you guys do not turn profitable. So, without further ado, let's get into this today. This is a crazy image, by the way. Like what? How did you even get the toes and shit in there? Like, this is crazy. But anyways, so homework checkup, habits, everybody did that, and then who here started their trading journal? Just do a thumbs up to the most recent text. You guys started your trading journal? Good. Definitely don't stop doing it. Okay, and who here took a trade today? You guys took trades? Okay, and then who here? You guys took trades, and I'm assuming that you guys journaled them. Okay, today was Friday, so we're gonna have a little break over the weekend until you guys will be able to journal again. And then next week, we're actually going to be going over our confluences. Today, we're kind of going to be, it's similar to the psychology lesson where, sorry again, forgive me for the yawns, but it's going to be similar to our psychology lesson where I pretty much explain what trading with confluences and with an edge within the market is, kind of give you an idea of what confluences are, and kind of give you like the overall layout of how you guys should be structuring your strategy moving forward from here. And then from there, like you guys will have the framework for it, and then we just give you guys the confluences all next week. And then after that, we can go into how you guys can use strategy to your own benefit. And hopefully next week I can be a little bit more awake because I'll finally be able to reset my caffeine tolerance and I'll be able to have coffee again. Not at such high volumes because I remembered what the fuck that does to me, but I'm going to start off really slow after a full week has gone by. But anyways, let's get started, okay? So, start off with what are confluences, okay? Confluences are reasons for why price is going to move, okay? So that's, I mean, if we just look up the definition, okay, not the river. River is ridiculous. Oh my god. Okay. Well, let's not talk about rivers and instead let's talk about how it applies in trading. Okay? But essentially, confluences are reasons for why price is going to move, and confluences give us reasoning to where price or why price is moving the way that it is. Okay? So we can really say confluences can be literally anything, okay? But that's not necessarily a good thing, right? We want to use good and sound confluences, but confluences could literally be as stupid as I woke up at 6 a.m. today instead of 6:30, so because of that, I'm taking a long. Okay, it's reasoning for the way that we use Confluences. It's the reasoning for why price is going to move, and it's the reasons for why we execute a trade. Okay, so for why price is going to move, we want to think about liquidity, imbalances, and orders getting filled. Okay, that is typically why price is going to move. And we have several different confluences or reasons for why price is going to move, or things on the chart that we can show directly through just pure price action, showing liquidity, imbalances, and orders getting filled. Okay, and something else that I want to touch on, these can happen everywhere on the chart. Okay, so we'll get into this a little bit later today, but price is fractal, meaning the way that price moves on the daily is the exact same that price moves on the 1 minute. Okay, and the way that price moves on the 1 hour is the exact same as price moves on the 15 minute. Okay, like in terms of candlesticks and reactions to confluences. Okay, price is continuously looking to looking to go towards draws on liquidity, fill imbalances, and then in turn, by doing both of those, it fills orders. Okay, and that's what confluences help us do. They help us give us reason for why price is going to move in those ways. Okay, and these can happen literally everywhere on the chart. Okay, what else do confluences give us the ability to do? It gives us the reasons to execute a trade. So most people, when they think about confluences, they think, oh yeah, 3 confluences to enter a trade. It doesn't even have to be 3 confluences. That's just like usually what most people say. I think it's funny that it's just been like turned into that now, which I guess is a good thing because people are waiting for more reasons to enter a trade than less. But moving forward, confluences with reasons to execute a trade is pretty much high probability reasoning for price to go from its current price to desired price. Okay, so those confluences help us decide and help us give us reason, or as profitable traders, high probability reasoning for price to go from its current price to the desired price. Okay, and along with that, with good risk management and risk reward. Okay, and if you don't have either of those, you don't take the trade. Okay, so confluences can give us a high probability reasoning for price to go from the current price to a desired price, but if we don't have good risk management plan and good risk reward to take the trade, then we shouldn't be taking the trade. And on top of that, psychology should not and should never and cannot affect your reasoning for executing a trade. Our only reasoning ever should be purely based on the data that's given to us, and that goes back to that psychology lesson talking about how we should be acting purely based off of sense, data, analytics that gets put in front of us. Because believe it or not, I'm kind of crazy for saying this, but like technically, okay, hear me out. This sounds crazy, but technically, if we all operated like as robots, obviously that takes out human nature from everything, and like humans are awesome, or for the most part, we have emotion and we have other reasonings and instinct, and we have other reasonings to act certain ways. But if we all were just on a script or on a program, there would be little to no problems ever. And the reason why there are problems is because we as humans tend to act the majority of times on emotions and on instinct instead of purely just off data. And that's why we have a bunch of problems in this world. But again, that would be taking away what humans are all about, which is emotion. Okay, but this is super important. Okay, so confluences are the reason for why price is going to move. Okay, through liquidity, imbalances, and orders getting filled, and they can happen everywhere on the chart. Price is fractal. Okay, feels like I'm in class, like giving you guys a lesson. which pretty much this entire first week is just lessons, and then we can get into actual Confluences shits and like get into the actual chart, but starting next week. But these are all really important. Okay, and then also there are reasons for us to execute a trade. They can give us high probability reasoning for price to go from its current price to a desired price with good risk management, with good risk to reward. And if you don't have either of those, you do not take the trade. And psychology should not and should never affect the reasoning for you to be taking trades or for you to take a trade. Cool. Okay. Moving forward, here we are. Price is fractal. Okay, so the Confluences taught that I will teach you next week can be applied on any time frame. And I need you guys, wherever you guys are going to be taking notes for next week's lesson on like the Confluences that you guys are learning, I need you guys to have all of this stuff down next to it. Because I'm going to get pissed off and I'm going to be really upset if, like, on week 3, I get questions on shit that I covered during week 1 or during week 2, and a lot of the stuff that has to do with, like, Confluences and just strategy creation is going to be within today. Okay, so please, like, put this wherever you guys are going to be writing down like your questions or whatever, help for Confluences. Okay, but anyways, price is fractal, which means Confluences the Confluences taught can be applied on any time frame. This isn't something where you guys go on YouTube and you look up this 5-minute only time frame gold strategy is the best strategy in the world. Okay, that is not the case. Okay, because the things that I'm teaching you guys is purely direct on how price moves. Okay, it's not on EMAs or SMAs, crossing. It's not on, I don't know, let me think of something else. It's not on like 15-minute only time frame. You wait for this candle to form and then you go long or then you go short. It can be traded across every single time frame. These Confluences are found everywhere. So please keep that in mind when we're going into the Confluences week, where I teach you guys about liquidity, where I teach you guys about order blocks, where I teach you guys about breakup structure. They happen on every single time frame. Okay, so what happens on the daily time frame happens on the 1 hour. What happens on the 1 hour happens on the 1 minute. And all of this, now that we have that in our head, once we start learning the Confluences, it literally just purely depends on what time frame you want to act on, what time frame you want to execute on. Okay, so if I'm somebody that, let's say some of you guys have really restricting jobs, okay, and you guys, sorry, yawn coming. And you guys like are on and off for like weeks. So like, let's say you're on for like 2 weeks and like you simply just don't have the time to be waking up for New York Stock Exchange Open. But you have like times like here and there throughout the week. Maybe you would opt to be a swing trader. Everything that I teach in the Confluences class can be applied to that of a swing trader. Why? Because price is fractal, and everything that I'm going to be teaching on there can be applied to every single time frame. Let's say you're somebody who has a little bit more time and doesn't like to execute on the 1 minute time frame. It freaks them out, and they want to do intraday trading, where they hold trades for 2 to 3 hours at a time. Okay, maybe they will execute on the 5 minute or the 15 minute. Okay, and then let's say somebody like fully makes this their job, and again, this is like just made up shit. It's literally just whatever works for you. Okay, but let's say you let me think. Yeah, let's say this is like your full-time job, but you are trading with super high capital and you only need one trade a day to keep the paychecks away, and you really just want to have it be as quick of a work day as possible, and you only want to be trading for an hour. You would probably execute on the 1 minute. And all of these things are possible because price is fractal and because of the confluences that I'm teaching you guys. Okay? Give me 1 second. Trying to wake up a little bit more by downing some water. Give me 1 second. Okay, sorry. Moving forward. Damn. Moving forward. Personalize your strategy. Okay, so if the confluences that I teach you guys, and we're going to go through a lot of them, okay, I added probably 3 more confluences to this mastermind compared to all the other ones. Okay, if a confluence doesn't make sense to you, don't use it. If your win rate is low with it, don't use it. So let's say I teach you guys break of structure. Okay, and a lot of you guys are going to be like, wait, don't we need to know like break of structure in order to? Not technically. Not even technically. Okay, let's say you guys don't even understand break of structure. Obviously, we're going to want to drill out all of it so that hopefully you guys can understand every single confluence. But if you guys don't understand it, then don't use it as a confluence. And again, going back to those journaling your trades, if your win rate is low when you take trades off of order blocks, it's clear that you don't understand them well enough, or it's clear that they just don't work well with your strategy. Don't use them. Right? And I can guarantee you that your trading will significantly perform better by doing this. Okay? By removing shit that, like, it would make sense, right? If you remove shit that doesn't work, and if something doesn't make sense to you, you don't use it. It's like if I suck at going between the legs for basketball, and every single game I try and go between the legs and that shit bounces off my fucking foot and goes out of bounds, or someone steals it, why do I keep doing it over and over again? Versus if I know I'm really good at a crossover and it works every single time and I can make a shot every single time by using it, why wouldn't I use that? Right? That's the way that we want to think about confluences. Okay? So use confluences that work for you and make sense to you. Not if they, give you a low win rate, and not if they don't make sense to you. La. Jeez. Okay. And then from there, I'm going to help you guys build your own strategy off of confluences that I teach throughout next week. Okay. And this is something that you guys, it's not necessarily like I'm going to go through every single one of you guys and be like, hey, this is the best strategy for you, because only you know the best strategy for you. But, okay, based off the confluences that we go over next week, I want you guys to build your own strategy that based off the confluences that I teach next week. Okay, and yawn coming. Fuck, man, I'm so tired. Ugh. Okay. And the reason why you want to build your own strategy is because, well, we'll get into this a little bit later, but if you're able to build your own strategy off of confluences that I teach you, it's going purely based off of what you see happen daily on the charts. So if you just copy what works for me, like odds are it won't work for you because it doesn't click in your head. Like the whole reason why I use the strategy that I have, and this is something like we can all use similar confluences. We can all use the same exact confluences, but that doesn't mean that we trade the exact same way. Our entries are going to be different than each other. Our reasons for entries are going to be different from each other, but we very well could be catching the same move every single time. Or we could be catching opposite moves and both be hitting take profit. Okay, but you guys, this is something that's like super important that I feel like a lot of people just never get to in trading, which is making their strategy their own. Okay, because it's similar with basketball. Like if you don't have your own play style, you'll forever be like the Walmart version of whoever you're trying to model your play style after, right? So if you guys try and model your trading style after me, you guys will forever be the Walmart version of me because there's no way for you guys to, I guess, get creative and have freedom with this. Again, imagine that this is like some sort of video game. All of you guys play video games differently. It's the same thing here. You guys shouldn't be trying to copy and paste what I'm doing. You guys should be doing what makes sense and what works for you and what you see happen within the market. So if you can see repetitions on the chart that happen daily that, in quotes, no one else can see, you will be able to succeed by using our confluences. So like every single day when we start going over our confluences, like that's how I created my Forex strategy. My Forex strategy was purely by myself. Like that was on my own of me just having so much time on the charts and seeing like, damn, price does this every single night at London session. Okay, originally I just called it like the London session fake out, and it was literally just a liquidity sweep, but I had no clue what that was at the time. And it was something that I saw consistently happen day in and day out, and then I formed a strategy based on that. And that's exactly what you guys should be doing day in and day out with the confluences that I give you. So you guys are going to have tools where you guys are going to be able to see those repetitions happen day in, day out, how they're reacting off of certain confluences, because again, confluences are the reasons why price moves. So you're going to see price moving, and you're going to see the reasons why prices are moving, and then you guys are going to be able to create a strategy based around those reasons why price moves. Okay. I'm suffering. Whew. Okay. Okay, moving forward. This is something that is huge when getting into strategy, trading, everything. Stop overanalyzing. The more you analyze, the more of an issue it's going to be. So jeez. So let's say I get it here on the chart, and I say, okay, there's a draw on liquidity right here. There's a draw on liquidity right here. There's now there's draws on liquidity right here, and there's a draw on liquidity right here, and right here. But then there's also fair value gap right here, and then there's also, oh shit, there's a bunch of 15-minute fair value gaps, and then there's also a breaker block right here. But then on the 1 minute, we're moving up, and there's so many draws on liquidity right here. There's one right here. There's one right here. There's one right here. There's one right here. We will have no fucking clue where price wants to go. We'll have no clue where price wants to go if we just start drawing out and marking out every single confluence in the world. Don't start thinking you're a genius while implementing everything and the kitchen sink. And what do I mean by that? I mean, once I teach you guys these confluences, you guys are going to start seeing them on the charts, and you guys are going to get super confident. And you guys are going to be like, yes, I'm going to be a professional day trader because I learned liquidity sweeps and I see them everywhere. And then when the time comes for you guys to see them live, you guys can't see them, start freaking out, and then start losing money. Okay? So I wrote down this acronym. Fuck. I wrote down this acronym. It's called Keep It Simple Stupid. Kiss. Give me kisses. Keep it simple stupid. Everybody wants a kiss. Everybody should want to keep it simple stupid. Okay? Where your daily bias, it literally, like, and it doesn't necessarily have to be like simple, like price up, so buy, right? It shouldn't be like that. Okay? It should obviously be based off the confluences that I give you guys, but it shouldn't be so dramatic and so freaking crazy where like you guys are trying to mark out everything and then like next thing you know, you don't even know why you're entering a trade. You're literally just panicking. Okay, so when you're creating your strategy and giving yourself reasons to execute, keep it simple. Okay, and what do I mean by that? I mean, when you're finding bias, keep it simple. Okay, you can literally keep finding your daily bias extremely simple, and I'll give you guys a couple ways to identify daily bias after we go over our confluences. Okay, and on top of that, when we're looking to execute, keep it simple stupid. Okay, we should just have like super easy and simple rules for us to execute. We don't want to have like, if this happens, then 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 I should risk this much and then I trade. No, it should be like, this is my bias, and we have our bias going into the trading day because we looked at whatever time frames that we look at for bias. And then we have where we want to trade, and then from there, we literally just need like a couple reasons to be able to enter it into a trade. Keep it simple, stupid. Okay? Sorry, there's another yawn coming. Please. Okay. Last slide. We're going through this pretty quick, so I might open it up for questions at the end of this. Okay, so what you guys should be looking for after I give you guys your confluences and after I teach you guys, okay, how we can use them. So write this down. Because, again, I don't want to be going, like, after we go over the confluences, I don't want to have to go back over this little slide presentation. Oh, man. Okay, so what you should be looking for. How do you find your bias? Okay, and again, what time frames, what confluences are you looking for you to create your bias? So how does your bias get created? And again, this outline and this blueprint will pretty much help us create our strategy or our trading plan. Okay, so how do we find our bias? What time frames do we look at? And what confluences do we look at, or what confluences cause us to create our bias? And then, how do we execute? What time frames are we executing on? And what confluences cause us to enter into trades? Okay? And again, this is going to be different for a lot of people. Okay? And your execution strategy doesn't have to be the exact same every single time. You guys can have different executions, okay, and you guys can have different confluences for why you execute and enter into trades, but I just want you guys to have, like, the overall outline of it, right? Okay, and then moving forward, damn, I have this big-ass ingrown hair that is bugging me like a bitch, bro. Lastly, how do you exit? What time frames are you going to be looking for exits on? What confluences are you going to be looking to exit on? for you to exit trades for either a profit and for a loss. Okay, so we, along with exiting for profits, we need to know how we are going to exit for a loss. If anything, that's more of what we should be concerned about, of how we can exit for a loss rather than of how we should be able to exit for a profit. Because for the time being, we're taking a lot more losses than wins. Okay. Man. Alright. So this is the outline that I want you guys to have when we go into our Confluence days. And again, our Confluences days it's going to take a full week for us to get through every single Confluence that I have to teach you guys. And that's going to be the first time that we actually get onto the charts. But like I was saying at the very start of the mastermind, boys, this pretty much wraps up our first week after today. This first week is going to be the most important, because if you guys don't understand the basics and the basic fundamentals of what I taught you guys today, notice how this was structured. First of all, we talked about the big three. 2 days on psychology, 1 day on risk management, okay, and another day on strategy. Psychology, risk management, and strategy. And we need the fundamentals, and we need a full, good understanding of all of those before we can actually get in and start practicing them. Okay, and you guys got the understanding of psychology. You guys started practicing it by quitting your habits, or some of you guys quit your habits. The people that relapsed, you're not much hope. Like dead ass, bro. Like, if you guys relapse, I have nothing to say to you guys except good fucking luck. I would start over and try and start again. Okay, and then we talked about risk management. We talked about how we can create a good risk management plan once we start getting data from our trade journal. Okay, and we talked about how we can have a good risk management plan depending on what type of trader we are, depending on what confluences work for us, deciding what we can rule out and rule in, deciding on what we put heavier risk on and when we take risk off. All of those things are going to make us have a much higher monetary return. And then on top of that, we need to understand the full framework of us entering and exiting the market. And without us understanding this, everything that I teach next week will be pretty much useless in my eyes. So we need to be able to understand all of this stuff, especially this, the personalization of your strategy. This is really important. Okay. We need to get all of that stuff down. Okay, so now we have some time left. I didn't expect me to go through that so quickly. So I'm going to go ahead and open up chat, or Connor, can you open up chat for questions? Don't spam like a bunch of bullshit. We're just going to open for questions really quick, and then and I'll have Connor like pause it whenever. Can I see slide 2? Slide 3. Did you smoke when you were profitable? I don't want to say the fucking answer to this. It's yes, but I've stopped since then, and I highly suggest all of you guys stop. So wait. So here, everyone ask their questions real quick. Yeah, cool. Pause the chat real quick. Yeah, you can pause it. Okay, cool. I'm gonna go through some of these questions. Okay, first one. It's been 2 weeks that I'm trading on a 10K demo account, and I'm on a 10 win, 5 losses, and I use your strategy for the past 10 trades, and I'm on 7 wins, 3 losses. I'm working and studying 8 hours a day since 2 weeks. Do you think I'm a profitable trader? Just the luck of a beginner. I feel like I do everything right. But what's your opinion? You've been trading on the account for 2 weeks. I could give a baby a MetaTrader account and say press buy or press sell and then close it whenever you want, and they could, and I'm not saying that they definitely would, but I'm saying that they could have a probability, a decent chance at getting those same numbers for 2 weeks. Just being dead ass with you, you need a lot more time in the market to prove that you're profitable than just 2 weeks. And then in just a month. Slide 3 is right here. Are you feeling better? Not really, bro. I realized that I was running on just like I realized that I was literally just running on chemicals to stay awake. And I realized that I have a severe lack of sleep as of recently. So I didn't trade today. I slept completely in, and I'm gonna get a really good night's sleep again tonight. And this entire weekend, I'm just going to be trying to sleep and sleep and sleep. Get a lot of rest in. What's daily bias? Okay, so daily bias is pretty much when you come into the market and you figure out what direction you think the market is going to go for the day, or even more specific, where you think the market is going to go within your desired trading time. So like for me, I only trade for like the first hour and a half of market open. Okay, I get on during pre-market too, so I'm on the charts for like a total of 2.5 hours. But daily bias essentially helps us figure out how we're going to trade for the day, right? Are we looking for buys? Are we looking for sells? Okay, like where do we think the market is going to go overall? Okay, and then we can scale down and then look for executions. How many Confluences do you recommend? Well, I'll get into that. We have like a full couple lessons on strategy creation. What are your favorite Confluences? We're going to cover all of my favorite Confluences next week. How long should I stay in a trade for? Okay, so this is another question where it's like it's purely dependent on the type of trader that you are. So let's say I'm a swing trader and I want to see my trade play out over the course of a couple weeks. Cool, I hold it and I stay in the trade until my exit point gets hit. Okay, right here, until my exit point gets hit. Okay, versus let's say I'm a scalper and I only like to trade on the 1 minute time frame. Okay, I'll probably be in the trade for 10 to 15 minutes. So purely just depends on what type of trader you are. What Confluences hold more value than others? We'll get into that in next week, but my short and quick answer to that would be no Confluence holds more value than another. Someone said stop smoking, for real. Gotta stop smoking. No homework going into the weekend. My only homework would be the one and only homework that you guys have is just don't do those fucking habits, guys. We're gonna make that real fucking easy for you guys. Don't break those habits, please. Thank you. For the funded account, do we have the challenge as well? Yes, you do have the challenge as well. Should intraday trades be executed on the 1 minute? So let's think back to what I was talking about on this slide. You're asking me, hey, what time frame, if I'm this type of trader, what time frame should I be executing on? Why are you, this is something that, like a question that I have for you. Why are you asking, I know that it's because I'm your mentor, but let's say I give you all the tools necessary in order to take a profitable trade, and you guys have all the Confluences. okay, why would you come to me for how you guys should execute a trade? And I know that sounds kind of like hypocritical and kind of like reversed on their ass. Okay, but if you think about it, you guys are trying to create yourself as traders. So think about it for yourself. Should intraday trades be executed on the 1 minute? Well, it also depends, right? What type of trader are you? Are you trading for hour, 2 hour, 3 hour long moves? If yes, then maybe you shouldn't be trading on the 1 minute time frame. Maybe you should scale up a little bit more because you're going to need more of a higher time frame confluence, more of a higher time frame reasoning for price to be able to make that 2 to 3 hour move. Okay, versus if I'm only trying to catch 15 minutes worth of price action, it would probably be smart for me to be trading on the 1 minute. I haven't taken a real trade yet. How should I be repping without a full understanding of Confluences? You're doing perfect, bro. Because I haven't even gone over Confluences. Don't even be taking no trades yet. Like, simple as that. Like, the best thing that you guys could be doing is if, like, you guys have no idea what any of these Confluences or what any of this shit means, the best thing that you guys could be doing is just, like, waking up, looking at market open, okay, and just seeing how price moves. And like literally, like make it a fucking game. You guys have no fucking clue why price wants to move the way that it does. So on market opens, literally just play a fucking like make it a fun fucking game. Just be like, I think price is going to go down. Do I know why? No, but we'll see what happens. And then you see what happens, and then take notes of like the little patterns that it does. Okay, so like on this, we saw price come up, take out liquidity or take out this high, and then boom, price ended up falling heavily. Okay. But yeah, if you don't know any of the confluences yet, the best thing that you can do is just hands off and be locked. Make this shit a game. Remember, if you aren't having fun with it, then can't do it. Okay, you say not to mark out everything and to keep it simple. So how do we know which levels are good? So in the strategy creation days, I'll kind of give you guys again a overall framework. I'm not just gonna give you guys the confluences and then just be like, all right, pack that shit up. Like you guys are on your own now. Okay, I'm going to give you guys a good a good overall outline of how you guys can use all of the confluences together to create your own strategy and show you guys how I use confluences together for my strategy. Okay, so I'm not just going to leave you guys in the dust. Okay, I'm going to show you guys which confluences are good, what like kind of what time frames that you guys can use for certain things and all of that. Okay. So I'm new to trading and still on the boot camp. But was this a good idea joining this at the same time? I wanted to catch up and get ahead as soon as possible. Yeah, bro, 100%. Doing this along with the boot camp is big timing. Okay, so I know risk management was yesterday, but when you decide you want to risk 1 to 2%, how can you size correctly? Can you show us an example of a calculator? Okay, so there's 2 different types of calculators that we can use for futures. Here, let me just start a freaking paper trading account real quick. And look how awesome this is right here. Okay, so on futures, we have this thing right here, which is we choose the units, okay, and then we place, look, there's literally the calculator already on here. So typically, like I connected it to the paper trading thing, okay, which is kind of just like a demo account, okay, which some of you guys could be using, okay, but ideally you connect it to like, I don't know, Trade-Evade or TradeStation once you guys go live. But what you guys are going to do is when you guys are going to place a trade, you guys can see it literally lets you choose the percent risk that you want. So if I just set this to 1% risk, boom, 1% risk with my stop loss at this time. So like, let's say I do this and I say, hold on. Let's say I want to place a buy position, go long, boom, stop down here, 77 ticks, 77, and I want to risk 1%. Let's say I wanted to risk 5%, boom, 77 ticks right here, price 5213.25 because that's our stop loss right there. We're risking 5%. It does it for us for our account size. It's awesome. Versus, let's say I want to risk 2%, 2 units. Okay, as long as we have this punched in correctly. Okay. So that's futures. Now for my hair smells bad. No, it's my hands because I was boxing. Shit smells horrible. Now for Forex, let's see here. Connor, do we still have that the Forex lot size calculator in the Discord anywhere? Oh, I found it. I got it. Here you go. I use securities.io. Okay, this is a good one. Okay, and this is really if you're trading on any sort of Forex prop firm, and this is the best. Oh no, you're chilling. But this is a really awesome position size calculator. Oh wait, what? I can pop this out? What? Craziness. I can literally pop it out. You can literally pop it out as like a literally punch size calculator on the side. That's awesome. Didn't even know that. But anyways, this is similar. If you guys are trading on MetaTrader 4 or MetaTrader 5 or Trade Locker, then you guys are going to be using this. Okay, obviously stop loss is going to be in pips. So let's say you're trading on GBP USD, your account balance is $10,000 and you want to risk 3% and the stop loss in pips is 50. Oops. You calculate it, boom, this is the lot size that you punch in, 0.6. Okay? And then the nice thing about this is they have, damn, that would suck. Bro, that sucks. Oh, here we go. They do still have it. US 500. Okay, so this is the S&P. So let's say you guys are trading the S&P 500, but you're trading it on a Forex brokerage or MetaTrader 4, MetaTrader 5. Okay, this is something that's really big that happens every time you switch it over to like a CFD or an index thing. You're going to hover over this gear and you're going to click that, switch stop loss and pips. So again, let's say we have we're going to make the account size bigger. $50,000 account size and the stop loss is 100 pips. And we want to risk 2%. Okay, and then this is big too. Depending on what brokerage it is, so like for one-of-one funding, ours, I'm pretty sure, is 10 contracts per lot. Okay, the way that you guys can find this is if you guys just go to MetaTrader, we're going down deep in here. Let me find MetaTrader. Damn, I logged out of all my accounts. Fuck, let's see here. Okay, on MetaTrader, right here, you guys are going to tap on whatever thing it is. So like I'll tap on Euro USD. And then I click on details. And then you'll see where it says contract size. And it says, for this one, it's 10,000. Okay, for US 500 or SPX 500, for US 30 and for NASDAQ, okay, it's going to be smaller than that. Okay, it's going to say contract size per lot. So for one-of-one funding, I'm pretty sure the brokerage that we use, it's 10 contracts per lot. So you just type that in, or you would go on MetaTrader or TradeLocker and you click details and you would see how many contracts it is per lot. You type that in here, click calculate, and then boom, that's what you're going to use. Sometimes on other prop firms, it's 100. Okay, it just depends. They're kind of different with CFDs and indexes depending on what prop firm and what brokerage you trade on. But yeah, let's see. That's pretty much it for the questions. Cool, boys. Well, that was a lot of information today. Take it in. Take a little fucking breather. You guys have been working hard this entire week. We did literally went full force. Did a class every single day since Monday. So I'm proud of you guys for that. It's just the start. Okay, lots of like really basic fundamental information. But on Monday, we're finally going to be able to get into the charts, and we can talk about draw on liquidity. We can talk about liquidity sweeps. We can talk about break of structure, order blocks, fair value gaps, inverse fair value gaps, SMT divergence, a whole bunch of shit, equilibrium, so that we can make you guys better traders, okay? So I'm really excited for that. This was just the first week. First week said and done for Mastermind 3.0. I appreciate you boys. I'll catch you guys on Monday, okay? Have a very safe weekend. Don't do anything fucking stupid. Stay locked in. Okay, you guys have been crushing it this week. I know it's just a lot of me yapping to you guys and not many questions were able to be answered, but that's kind of what we have to do for the first week, so I can just drill those fundamentals in for you guys. And then after all of that, which means on Monday, we can get into the fun shit, which is actually teaching you guys how to be better traders on the charts. All right, boys, I appreciate you. I will see you guys on Monday. Peace out.